Good morning, everyone. Microphone check. Screen check. Yeah. Looks like it's working correctly here on all fronts. That's always a good thing. Fantastic. Welcome, welcome. Yeah, looks good. Good morning, SSFTG family. Hopefully everyone had a chance to rest up, get ready for the day ahead, and all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. Very important to understand everything that is inside there. And then just a quick note for you all before you jump on in today, if you're watching on the YouTube side of things, the YouTube stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Hang on one second. Oh, Burt's Bees, take me away. It's like the best lip balm on the planet. Not sponsored. Hashtag not sponsored. Anyway. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. And welcome to the SSFTG family as I whistle at you once again. I think I did that yesterday. If you aren't a member yet, you do have a few different options to check out if you are looking to further your trading education and career. One of the easiest ways to jump on in is right here on YouTube. You can check out the join button below the stream, which gets you access to the extended hours room, where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the community area where I post all kinds of different links and chart setups and stocks and analytics and more. And of course, every member gains access to the Discord chat server. Plus, you get the awesome badge next to your name there on YouTube to show your support, and it just kind of looks cool. Before everyone blows up and tells me that my mic is quiet on YouTube, I just remembered I was recording a video right before I opened. I got it back. I got it back up again. Yep. Yeah, there they are. I just moved my thing over and I see check mic, check volume. Morning. Good morning, everyone. I got it. What would I do without you guys? If you want to take a massive step further in understanding what it is that we are doing in our trading approach and all that, and what we're doing every day in the room, look no further than the Day Trading Academy. That's where you can find out how we do everything. But listen, this isn't a small little PDF guide that you're going to finish in an afternoon, all right? There is a quick start course to get you going, but to really dig in like the Academy does, you're looking at about 19 plus hours of video course material. And along with that, there's homework and study guides along the way to really make sure that you're understanding what's going on while you navigate the course, which I review personally. And you get the DTA upgrade discount too when you're ready to go up to the final floor, which is the VIP. That's the executive suite. VIPs have permanent access to everything that is SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated non-delayed stream for the entire session, meaning that they are in the fastest connection that you can get without any delays from the start to the finish. So whether you're here for the very first time or you're a VIP vet over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some charts, take a look at some news, see what's going on today as far as the markets are concerned, see what all is happening there. Don't forget to grab your morning DP levels. Those are posted for you in the major 7 markets. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. As far as the news calendar is concerned, there's really not much. We've got 12 o'clock EIA short-term energy outlook. I don't know what that's going to do. If I'm totally honest, it's ranked as a big announcement, and well, oil's been a little bit in the hot seat here. So, man, that's a tough one. That's a real tough one at noon. If you are an oil trader, just be careful on basically any energy sector. It's probably going to get a little bit crazy there at noon. One sec. There we go. All right. Aside from that, though, there's not really anything else. So we've got the typical Tuesday API weekly crude oil stocks. It'll give us a heads up for what to expect tomorrow. That's it, though. So let's take a look at the S&P. We've got, just, I mean, it looks like nothing's happened. We almost have to, at this point, disregard that first leg up. It's gone so far away from that now that it's almost a different world. You know, it's part of a different universe. It's not to say that the market won't come back and test some of that, because they very likely will at some point. But as far as the POC is concerned and all of the movement, I mean, like we saw yesterday, we had the shift that was back earlier at around the 4400s. Yeah, 01, and the reversal back up. Since then, we've been kind of going, I don't even really want to call it a range. It's mostly a wedge. Nice little wedge going on up here. I mean, what better situation to have than the market to false break low into the POC at 4401 and then jump right back up. There is another one that's building just underneath that at sub 4400s. So there is a little bit of a zone there, but man, what better situation could you ask for, you know? As far as the overall cycling is concerned, we were talking about how this may be wave 1, wave 2, wave 3. First of all, it's not long enough, and second of all, it's already broken back into wave 1. So this can't be wave 3, or at least not yet. What I mean by that is it can't be done with wave 3. If it's going to be a wave 3, it's got to go further up. And, well, it would make a lot of sense to have a nice little trap and then get this thing rip-roaring up into the 4500s. Over on gold. Gold did have that slight continuation of the downside, and now they're kind of getting pegged a little bit. There's not really a ton going on. If we look at the overall volume structure from the... Let's go from this pop to drop. From the pop to the drop. All that volume in the 14.4s. Oh, man, that's a lot of traders that got blown up on that. Yikes. I mean, look at the volume differences, right? This is a squeeze. This is a perfect example of a really aggressive squeeze that happens all in one. But, you know, it did take place over several candles and multiple days, even in the weekend, where we've got this really nice bullish continuation of the upside. We were talking about how that could be a break even, but bulls still had a shot, and you can see, man, look at the volume there. It built up like it was going out of style, because they know, right, and you can see where their stops were, the VVP. They have their stops underneath the low. Their entries are going to be right around here, and the upside objective fits from the probability of being like maybe 36% likely back to the upside, because it's about a 3-to-1. So it doesn't even have to, like 27% is still acceptable. It doesn't have to be right very often for it to work out in this case for that big of a reward. And a lot of traders will take that. Now, when they broke underneath it, notice what happened. They broke underneath it, dove lower. A lot of traders will build in if they're looking to average in, average out, which was done here. And the break-even point, you got to look real close because it wasn't there for much longer than a second. The break-even point is 50% between the two. That was right there. So all it allowed was for build-in traders to exit at break-even. That's it. Now, there's not a lot of traders that trade like that. A lot of traders are one in, one out, all in, all out. They're not building in, building out. So there's a lot of people that, yeah, they got their stops taken out, but there's a lot of other people who just got absolutely obliterated on this move to the downside. And we were talking yesterday on how I'm not necessarily anticipating it going down again. More likely a higher low test. Zone of interest going into today, if it can happen, down in the 1710s. Risk reward is still, it could be better. You're still looking at about 3,000 on the risk side just for one contract. Upside objective puts the target through the top as well. I just don't think that's an optimal area. It makes more sense for buyers to try to get in slightly lower, more down in the 1705s. And if they can get it a bounce off of the -1 DP, the -1 DP would put a target right inside the volume and back up to the high, and that reduces the risk by almost 30%. So as far as a favorable long area is concerned for gold, that's down here at 1702. And we have to remember to keep our eyes open. Let's see what happens if they can get down there. Over on crude oil, we've got, I mean, honest, 100% honest. We have the EIA stuff going on later today, and I don't even know what that is going to do to the market. Given everything that's been going on in the ups and the downs and the swings and the backs and forths, I think crude oil is kind of a don't touch scenario right now. The only thing that does stand out really obviously is that this market was trying to get a bullish transition up, and they just got dunked. So my curiosity would lead me to follow that rabbit hole and see, where did those traders get stuck, right? Where is the impulse? Now, we already know, even if we drag that forward, that transition was that ABCD move back up. Perfect, right? So when that rejected back down, again, traders took the exit at break even, sellers re-up to the downside. So we've got to kind of categorize this as, if these are sellers, and given the fact that it moved down so aggressively, I have to assume they are, where are their targets? Their half to one is down here. But are these really scalpers? Like, does that make sense for scalpers? It might have, if you want the highest probability. And if it did, when it broke down, they re-upped as soon as it came back again. That was the entire entry point for the next point down. So the next objective then is going to be 2 to 1. Now, 2 to 1, let me make sure 2 to 1 is right here. Now, when the market broke underneath that, a lot of times, if the sellers are going to continue, they'll come back and the market will re-up. But the assumption here is that they haven't hit another objective, like a 3 to 1. So a 3 to 1 has that hit. That's missed by a little bit. Jeez, oh Pete. So there is a concern here that the fact that they are missing some of these downside moves and missing this low, that could be the completion of this leg down, and the 2 to 1s, that's all they're going to get. Now, the 2 to 1, when we broke underneath that, you really want to see, just like we saw the half to 1, you want to see it act as resistance. And they tried, but then it broke. That's a problem. That doesn't mean the downtrend is done by any means, but that does mean that they're going to have a heck of a harder time keeping it going. More likely, if anything, we're dealing with a slight expansive channel or a megaphone working its way down, and we're probably trying to get back up to at least the top. And going back inside this 2 to 1 target area would make me very concerned if I were short. Like, wait a minute, that's not great. Now, if we modify the volume all the way further forward and see what's going on from the entire perspective, and this would be through the lens of a seller, because we're measuring from bottom to assumed bottom, which hasn't happened yet, that POC is still back at 71.91. No change. So the assumption is that shorts are still short, but they might be losing a little bit of ground down here. On the euro continues to just obliterate everything in its path. We're finally starting to wake up on the thing. The overall move that we've got going on had a nice little kind of sideways. It's so non-angular, it won't even let me draw it. It's supposed to be a wedge from here. Hopefully you can see the blue line. But we've got that break and a retest, which was right there, and a rejection back lower. That was also the break-even move that we were talking about for the longs trying to buy the pullbacks. So this move to the downside, again, just like we saw on gold, allowed traders to get out at break-even. It gave them a chance. But, right, there are still a lot of other traders who are looking for the downside objective from that bigger picture. We lost that POC in the middle. We're transitioning lower. The market's looking to the downside. Now we're down in the 17200s. It's still driving lower and getting smashed. So the move to the downside here, man, this looks absolutely horrendous. I guess for lack of anything else, it'd have to be that. Yikes. Honestly, I like this more from here. I just think this fits so much better. Wave 1, wave 2, it's just so much cleaner. Wave 2 obviously is an absolute disaster piece, so wave 4 is probably going to be quick and easy. It was. We've got 2 legs now to the downside after that's happened. Downside objective still could stretch a little further. It would be down in the 1.17060s. On Bitcoin, still rallying to the upside. It looks like another possible flag, but getting a little bit later in the trend here. As far as a continuation phase to the upside, we've got wave 1, wave 2. Wave 2 was very, very choppy. Kind of looked like an inverted head and shoulders there for a second. But we do have a follow through back to the upside. Wave 4, I mean, this could all be considered part of Wave 4, this giant mess in here. But really, the actual endpoint before the rally ended here, so that's where we'll call it. And that does still qualify for the impulse to the upside, which means that 5 is looking for a completion of 6-1. That was back to settlement a little bit further. I mean, they've kind of finished the job. We're in a corrective phase now. Buy low. That like this little trap going on down there, that's fairly low. That's kind of nice, but another lower point of interest could be down here, right? Think a little lower if it can. That'd be back to like 43. Then over on Ethereum, very similar situation. Incredibly aggressive bullish continuation. I mean, where do you even start the cycle on this? It hasn't stopped going up. Where we are now, very obviously, we're starting to go a bit more sideways. We're starting to transition a little bit. It looks like they had a small little bearish cycle to the downside, which completed a 5-wave pulse, and now we're back to the up. And the way that moved, I mean, this corrective phase, this is obviously a bit more than correction, right? That's a pretty big move up. So this may be the start of a new 5-wave structure to the upside, and this is just wave 1, wave 2, and they're building wave 2 right now. Wave 3 ready to come. So, I mean, Ethereum, I know it's buying right at the top. Talk about incredibly overpriced. But there is a reason to believe the bulls have a shot here. Going over to the NASDAQ and seeing what's going on there. Good morning, everyone. Welcome, welcome. Everyone that's tuning in so far, good morning, good morning. Taking a look at the daily and seeing what's going on there. Again, it's everything that we anticipated. The market's still grinding its way up. What a shock. Would have never guessed. With this continuation to the upside, this is what we were talking about. Every time we have this really strong, pulsy bear bar off the top that doesn't have any follow through, it usually just grinds its way up over the next couple weeks. We did get back to the highs. It did act as resistance as expected. And guess where we are today? Oh, joy. We're right back on top of it. Yay. In terms of this level, I know I keep deleting this. I should probably just lock this stupid thing, but let's make this a thickness of 10. We'll lock it, put it on all charts so that I can't keep deleting it on accident. And then again, the bottom, which, I mean, who knows if this will even come into use at any point soon, but lock it. Yep. Okay. There we go. So as far as the follow through, I mean, it's doing what's expected. The big thing that a lot of traders are looking for is the upside objective as far as the volume measured move. Remember, was right here. It started failing underneath it. Now we're kind of back above it. And that retest right there, boy, does that feel like a launching pad. Now, buying above a bull bar right at the top near all-time highs, you want to talk about a difficult spot to be a buyer. That's it. That's definitely it. So we've got to have context in mind here. We're not in a good location. I'll call it a geolocation, if you will, because it's so far out there. We're not in a good location from that perspective to want to be holding on for a huge period of time. More on the scalp side of things. Looking at the 15-minute chart in the structure that's going on overall, we have that complex corrective phase, which is going on, which we know really is, or was at least, a larger form wave on a bigger chart. If you zoom out to the 60-minute or so, you can see this is a, you've got to go back a little ways to find that one, but you've got wave 1, wave 2. You could consider that wave 3, wave 4, but there's a problem. I don't like that necessarily. It doesn't really fit the bill for me. I think this is all wave 3 into wave 4, wave 5. So this continuation up, really, we're just kind of in this larger sideways structure figuring out what we want to do. The bulls have broken above that larger wedge, but I mean, you can feel how much of a tipping point we're on. Like, if they lose their ground here, what's going to hold it? What's left? Like, maybe a retest of the POC, I guess. You know? But, I mean, what else is going to hold the market up here if they don't now? I don't see anything until, man, like, down to the 650s to, I mean, as high as maybe the 850s. I know that's a really wide zone, 200 points, but I'm more in tune with down here. That would be more satisfactory as far as a pullback goes. That's a big spot, you know. Do people really want to hold on for a $1,000 dip buying way up here? That's the kind of risk we're talking, you know. I mean, it's extreme. So from the 15-minute perspective where we are, it still feels like we're in a sideways structure. It hasn't really changed. We're kind of consolidating a little bit, not really doing a whole lot of anything. We really don't have any swings. This could maybe a 1-to-1 measured move down. I mean, it feels like they're kind of reaching, but sheesh. We'll see. We've got the open around the corner. Looking at the 500 tick and zooming in a little bit, we can see that for the most part, it's been bullish from the overnight perspective. The overnight happens right there. Right there. So that bull bar is the first candle of the overnight. Notice something interesting that's been going on as of late. The overnights have been really getting hammered, like with no remorse. I mean, repetitively. We're starting to see kind of a perpetual trend over the past couple days that the overnights have been getting just slammed. They do reverse back to the upside again, but I mean, that's definitely something to take note of. As far as the continuation of the upside goes on the incredibly micro scale, we've got the cycle to the upside, which could be, I mean, that doesn't fit because that would invalidate it. So this has to be what a disgusting phase that is, huh? Lovely. Sorry, it'd be modified up there like that. Disgusting looking, but I mean, it fits the bill. It works. So as it stands, we're likely more in a corrective phase. It would be much more interesting if we get a pullback down to the 126s. That would also be back to that 130, 150 area of interest, but geez, it feels like we're just swimming out in open waters right now with who knows what hanging out underneath us, you know? Who dares stick their face in the water and see what lurks, you know? This just doesn't seem healthy. Ascending wedge working its way up, though. I mean, as long as they stay above the 111s, they'll be all right. We'll see. Keeping an eye on gold as well, although they do have quite a way to go. We'll see if it gets down there. Looking at the S&P going into the open, we're basically opening with no gap at all. Like none. Okay, I mean, a quick gap closure would make sense. I mean, look at the way that this all formed, right? It's all basically inside of yesterday's first 10 minutes. It literally hasn't moved outside of that. An entire day. Yesterday's first 10 minutes. That's what we've been stuck in. So I mean, I have to assume that the high of day and the low of day of the 9th, or well, I guess technically the 8th, but is going to be a pretty big zone of interest. But the majority of that drop from 930 to 940, that's what we've been stuck in. Lovely. As far as the POC is concerned, and remember we were talking about yesterday on how the bulls were trying to build that trap. Guess who was successful? Just, you know, in hindsight, that hindsight humor. I didn't really want to take the risk, but there were obviously traders that did. What a play. If we continue this volume further forward, get the POC, which is hovering in the 44.26s. That makes sense. It's right back in the middle. Ay, that's disgusting. Well, I guess let's see where they want to open. From the microest of scales, we've got an L2 into an L2, so a rep L2, which did technically complete for the final leg to the upside. I mean, they are following the rules. They're doing what they should be doing. Might not be in the nicest looking way, but they're doing it. Oh man, this looks like it's staring off the edge of a cliff. I can't shake that feeling right now. If the Bulls can't get this thing going, they are in so much trouble. 15,143 is the POC that is being created inside of here. Now, if it does break above the 143, remember the POC measuring. That could be a midpoint. 15,193 would be the objective. I'm just having a real tough time shaking the feeling of how much of a cliff we're dangling our legs off of. Look, ma, no hands. Slip. Bye, Johnny. My daughter needs help. Hang on a second. Bulls are trying to get above this 15,143. 9:28 is the next time slot, 5 seconds away. Not really a whole lot at the 9:28 block. S&P is starting to get... We're starting to create a little bit of a gap here. If they open directly on top of resistance at 30 quarter, what a terrible spot to open. Well, terrible for the Bulls, at least. They got a lot of work cut out for them. Now, one thing that does stand out, we've kind of got this gap back here that kind of needs filling. I mean, technically it did, but it'd be nice to tick through that. Interesting. One minute to go. One minute to go, right around the corner. I mean, it looks like the Bulls are winning this fight right now, staying above these 143s, the last trap underneath the previous low. It's just, you know, the open. The open can change things real fast. Let's see what they want to get going here. In the short term, possibly 3 lower highs that are building up. Ding, 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 ding. I don't have the bell anymore. The stock exchange is open. Mild gap to the upside, inside gap up on the S&P. I mean, it opened up in one of the worst spots it could have opened up, right into 30 quarter. Again, we're at the open, but sellers selling into that 30 quarter, it makes sense. It's they can't ask for a worse spot to open. Nice little dive here. This is the attempt from the sellers to try to get things going now. We are underneath the POC 143s. Sellers are trying. And they're losing their grip pretty quickly there. Rotation back up, looking for bulls to attempt to try to get back up. Couldn't close back above that bull bar. Want to see them follow through a little bit further. Beautiful continuation up right there. Fantastic. Wow, wow, wee, wah. Now, remember, I can't stay in this for long. I'm not going to sit in this thing and hold for a giant runner, especially when I've only got one contract. We've got to be realistic. Remember where we are in the bigger picture. We're pulsing near all-time highs. We're breaking tops. This is really awkward. All-time highs are dangerous. Unless they're not. You know, there are those days where it just goes ripping through. Good old markets. Gotta love those probabilities. 60% of the time, it works every time. Notice the transitioning that's going on here. If the bulls didn't take their profit initially, seeing it trap up and rotate back down would suggest that they're taking their profit now. 143 is the deeper zone of interest. Buyers may re-up into this, but the scalpers were the only ones that proved anything. That's not enough proof for buyers to necessarily want to jump back in on it. Maybe it is, but nah, I didn't think so. Okay. Nice continuation back down again. Looks like we're starting to kind of measure out some of these moves here. We're resting right on top of that measured move pullback. It's back to that previous giant daily candles top at 131. This is where swing traders or low risk, high reward, low probability traders are going to be jumping in. Buying down here, because it's so early, you'd have to have it basically be a V bottom, but we're in a zone of value. And buyers will buy down here with tight stops. Big targets, though. Only has to work, 27% of the time. Nice initial pulse. Two-to-one traders have a nice objective right back to POC at 143 as well. I would like to see sellers fail a bit more, though, if I'm honest. Because, right now they're not. just throwing that out there. Sellers are kind of winning the fight at the moment. Double value pullback would be in around the 111s, and that number should sound fairly familiar. That is the POC off of the 15-minute. We are at the bottom of the wedge, but we missed the top, so seeing an overshot down underneath would make sense. There's a lot of things lining up for those 111s. Almost 5 minutes past. We haven't even gone 5 minutes. Nice little pop out of the gate so far. Now, remember on the narrower scale, we had rep L2s all the way up. L2, L2, L2. The next one was an L1. Very atypical. And if they're climbing the ladder, they should maintain that strength, and they fell apart. So if they are going to fall apart, where should they fall apart to? The next one down that they've been holding. So instead of an L2, you'd go down to a 3. And that's where we're finding support right now off of the L3s. So, I mean, here again, even though it feels chaotic and it feels like the market's really jerking all over the place, this is kind of the reassurance, like the pat on the back, like, nah, hey, it's still doing what it's supposed to be doing, right? It's following everything perfectly. Which means that we're still reading the story properly. Sellers are really trying to get this to go. What would even be the wedge here? Like this? Ugh. That's disgusting. Maybe ascending. I don't know. I don't like any of those. Maybe a channel. Or maybe nothing. Got the POC perpetually staying above the market. Now, this is a nice bear bar and a nice possible opportunity to short. The problem is you're shorting directly into settlement, and you're shorting directly around that daily bar support resistance at 3150. I'm personally not okay with that risk, but it is there, you know. And it worked. Fair enough. POC jumping down, very strong bull bar. Starting to create a bit of sideways consolidation and also maybe a bottom of this wedge now. We got to get our herky-jerkus on. Which way do they want to go? A trap underneath the low, dive into the double value? That'd be nice. That's a very strong bull bar back to the upside. Bulls have a potential continuation to the upside attempt to try to kick things off. The likely upside objective is going to be preferably in the nearer term, though, because of the way that this is setting up. We've got the top of the wedge there, which is kind of in the way. I'm going to use that little pop there to reduce risk just a little bit because they did hold off of that area nicely. You got to remember, we're dealing with a touchy, gross spot. This little zone underneath that previous inside swing, if traders are looking to trap a low, that would be the spot that would make the most sense. All right, I'll use that little pop right there to take the exit at break evens. They hit the stop area. The trade became invalid. I had no reason to be in the trade anymore. I'll utilize the volume as a perk to enter and to exit. Tried getting it going, but just didn't want to go. See if they want to rotate up this time. They still haven't even hit the low down here. This larger wedge hasn't really played out yet. Still hovering around the L3s. If we look at the deeper value pullback, that would place basically right in the L4s. And the L3s aren't looking too healthy right now, so. Golly gee willikers, Batman. Look at that first fight. Look at that candle right now in the 15. Whoo, lordy. That's a behemoth. On the S&P, why are my candles so thick? Okay, that's weird. My zooming on the S&P seems off. First 5-minute POC is on settlement. That's fantastic. Thanks, S&P. If we continue this a little bit further out, hasn't really changed much. As far as the NASDAQ, chances are I'm gonna bet that it's up on the top here of this bear bar. Yep. Actually lower than I thought. 35.75. Interessante. Let's pull this forward. 15,129 is the current developing POC with a lot of volume stacking up in the 120s. I still really like this dip for a bullish reversal. They're not showing up to the party yet. They're starting to climb back above. Back up to the top of the wedge. Very nice bull bar to immediately gap down to the next candle. Looking for this little bit of a dip back for buyers to attempt a secondary try. Market's still just kind of hovering. Very nice bull pop back up. See if they can finish the pulse. We're running into resistance at that 131, so I got to see them kind of finish the job here. Still holding above the 129s. Close below it. I'm out. No thanks. That was too much pressure from the bears. We don't have enough proof from the bulls for me to stick that one out. Small gain, nothing else. They're still battling. And I'm not going to help on either side of the battle, or at least not if I don't have to. I'd rather let them do all the work for me and come in afterward, you know? We're getting really, really pinched between this settlement and the 131.50s. 5-minute POC right up at there isn't helping either. On the 15-minute for the NASDAQ, POC's at 129, and trying to close above it in a minute and a half. It's the current POC that they're working on. Yeah, it is definitely a bear spiking channel. Which is why I'm still okay taking these cracks at the long, because I know in the short term I have at least up towards around the 140s or so for scalpers' objectives. It's just they're not quite reaching out there. There's not enough failure from the bulls for me to want to short because there's too much support underneath us. And there's just enough failure from the bears for me to give it a crack for the bulls, but then they end up failing. So it's this kind of game of cat and mouse that they're playing right now. I really like this bull bar back to the upside, attempting to stay above that POC at the 129s. We still haven't broken a previous major swing. That'd have to be up in like the 137.50s. There we go. Now the problem is it's probably not going to pull back. S&P continuing to the upside, 44.2775 is the POC. Jeez, this thing is getting jerky. Watch these flushes back. We're running into that previous POC here at the 143s. Remember, if longs were trying to go long here, they're exiting at break-evens right now. So this pullback that's forming, that's going to make me really nervous about buying the next dip. I need to see these bears fail. Okay. Good failure. Sellers still haven't been invalidated, but they've had pretty bad follow-through. S&P pulling back down pretty aggressively. This is going to start breaking out soon if these shorts don't start... These shorts are really, really stuck right now. Nice initial dip, although I'd like to see it go a little bit further down towards the 40s. There we go. Beautiful location. Oh, crap. I thought I got 5 on that. Didn't I have 5? Oh, I exited one too many then. Well, there's nothing I can do about it now. I'm looking for the continuation of the upside to see if they want to follow through on this break. Looks like an incredible break point. I thought I had one more. That was my fault. I thought I was still long too. Yay, human error. Market kind of stalling out at these highs, but if the bulls are going to get this breakout going, this is going to be the spot where they've got to really get it to continue. Okay. Remember, I'm basing this off of shorts being stuck, so I need this pressure to stay on the table. I need these shorts to be massively underwater and just getting worse and worse and worse and worse and worse. Beautiful objective, right back up to the top of the previous range. Fantastic. Right back up to the 150s again. Like I said, if I had one more, I'd still be long. I thought I had one more. Oh, that's so frustrating. Oh, well. Nice little dip pullback there. Market backing off once again. Why take profit in the 50s when it could potentially squeeze high? Yeah, so the reason why I took it at the 50s, remember, first off, I was anticipating having an extra contract. So I was looking at exiting in the next area anyway. So I've got to follow my plan. That was my objective. It was just my fault that I exited one too many, or I thought I had more. But when we start coming back up to this previous range that the market attempted to break above and failed, all of those breakout traders got dumpstered. So when the market comes back for those breakout traders, what do you think they're going to do? They're probably going to get out of break even. Hopefully they bought more down here to average in to a little bit more of a favorable position. But when it gets back up to this area, that's going to be where they start exiting. The thing is, see this volume spike right here? This bar, if you rewind the video a little bit on YouTube, this volume spike right here was not here before this candle got there. That volume was not there. It just went and it popped right up real fast. That's my cue. Peace. I'm out. Good enough. No thanks. You press too fast on the mouse. Yeah. Some of these are really, really quick. That's for sure. Oh, don't lose sight of gold. Don't lose sight of gold. Okay. Nice pullback further down. Keep in mind, yeah, on the VIP side of things, they do have the non-delayed stream, so it's less impactful, but it's still fast at times. You know, I mean, when the market's moving. 1 second, my daughter needs help. All right, sorry about that. We've got another continuation phase, kind of, sort of. I mean, this thing's just stuck. More continuation up. Sellers are still getting squeezed. Remember, if you've still got more, the upside objective is up into the, I mean, that's where you can start zooming out a little bit further and look. I mean, you're back up into the 165s? What? All right, bring here.
That's as close as I can go, because that's John.
There you go. Love you. So as far as upside potential, there's a lot of potential upside momentum here with the lows of the wedge, the everything that's setting up. I mean, it's looking really good. Hey, how's it going? Is the RTY going crazy? I've been so focused in on the NASDAQ, I haven't looked at anything else. Barely even looked at the S&P. Hang on. Oh, no! No, not the color change! No, no! Change back. God, I hate the color linking sometimes. Whew, I caught it in time, though. Okay. I almost changed everything to RTY. That would have taken forever. Jeez. Anyway. I have all of my charts color linked. And so when I duplicated the tab just so I could make an RTY chart off the side without having to reload a template and stuff. And I loaded up RTY without thinking about it, so I went to change all of my NASDAQ charts to RTY. Like, no! Yeah, that thing got obliterated, huh? Jeez. I mean, the way that this is... Hang on, let's go out to like a 60 minute... This is the issue with the RTY and where it stands, right? We've got this really gnarly looking wedge, and it's missing the highs. And the fact that we're seeing another failure off the top, I mean, there's only so much that bulls are going to sit through before they start giving up. Now, they do still have higher lows. They have everything going for them yet, so I don't think they're going to give up quite this, like right this second. I think this is still a BTFD, buy the dip type mentality down to the wedge lows. But because they missed the top, we might have a little bit of an overshot. And if it's going to overshot, what better spot than right there, 2180s. Trap that little low. Mm-hmm. Nice and tasty. Love me a good trap. Yeah, no problem. We have not broken a new high, so we still have technically a bullish developing POC with a POC back at 129. The POC, yeah, Steven, the POC did shift up on the S&P, which, I mean... Look at the way the volume's stacking. I mean, where are we right now? You know, that's my concern. I still look back to yesterday when we were talking about how a lot of traders will be trapping the shorts in here and looking for the rotation back up. I still think we're working off that same move. The only thing that might kind of change that perspective would be the fact that this leg down was strong enough to at least get to a new low. They may have been able to get a break-even point on that, depending on what the POC looked like. Well, let me get rid of that ginormous bear bar there. Yeah, so they were able to get an exit down there at the 44.25s. So this upswing, there's less resistance that's going to hold it down. I mean, I know we're at the top of a range that makes it a little bit awkward, but what are your thoughts on all the wicks and gapping on the past few candles in the 5-minute chart? Are you on the S&P or the NASDAQ? I'm assuming the NASDAQ, because this thing looks like a freaking train wreck. I think this more tells us that we have kind of an illiquidity. It's not necessarily that the aggression is going anywhere, because realistically we haven't gone anywhere. We've just gone down, up, and we're right back in the middle. So seeing these gaps and these big wicks, and then another gap, and then another big wick, and another big wick, and another one, and then they gapped up a little bit there, and then we're gapping down a little bit here. I think honestly we're in a range, and all they're doing is, think of it as like putting yourself in a you know that the movie Jackass way back in the day where they put him in that big balloon, and he was like inside the balloon, he's trying to like push his arms out. That's kind of the same thing. They're trying to see what side of the balloon's going to break. Like, nope, that didn't break. Nope, that didn't break. Until eventually it ruptures. And then the actual breakout happens. Kind of a crude example, but you know what I mean. That's what this feels like to me. It feels like they're still stuck in that balloon. Like, God, come on. Get me out of this stupid thing. You know? They just got to figure out what side's got the sharper point. I mean, obviously I think bulls, but especially that rotation all the way down near the 11s. They didn't quite get down to the 11s, which is a bummer, but and then I missed the other rotation. I tried getting an entry there, took me out, which it was a good exit to exit there because it did push down. Then missed the next entry, and that was the launch pad. Rotten bugger. I think it did the same thing to me yesterday too. And that speed is, by the way, why you're getting a lot of those gaps on those 5-minute charts, because by the time a candle closes, when you're executing that many orders, it just doesn't have time. It has to start the next candle, and at that point it's already trading 2 ticks different. It's more just a sign of illiquidity, high volatility. Which is interesting because we're in a range in the bigger picture, right? So looking at what's been going on yesterday, we've still got that continuation. I am kicking myself so hard for this one. I didn't take options. Normally I take options on something like this. I didn't take options. I didn't take anything. I thought for sure I was going to get that dip. Unbelievable. Anyway. I'm still frustrated about that. I'm gonna not look at it anymore. We've got 10 o'clock right around the corner. There's no news at 10 o'clock, but let's get the last questions in for the morning session, and then we'll transition over into the extended session for members and VIPs, and we'll go from there. Market's just kind of hovering. Now, going back to what you were saying, Stephen, this is a great example of the POC is in the middle, and now they broke above it. Where's the likely objective? Bottom to middle. Oops, that's not what I want. Pop it up. I know that my upside objective is going to be around here. It's made it to 34. The upside is 34.50. It's 2 ticks away. So, you know, just throwing that out No candle gapping, nothing like that. So we're still dealing with a little bit of a range, but all things considered, we're coming back to the top of that previous bar. They're trying to break out. Oops. I don't know if that canceled the alarm or not. We did close above it. Possibly some forming candle gapping at least. NASDAQ continuing its drive higher. All right. Well, I'm not seeing any other questions coming in on the on this side of things, so let's switch over to the extended session, see if we can find any other setups going on here. This little dip here might be an opportunity, a little high up for me. Gold's getting close though. There might still be some gas in the tank. We'll see. But for the rest of you, if you're ducking out, I hope you had a great morning so far. It's been a pretty solid morning, all things considered. Yeah, not going to complain. If I miss any questions, feel free to shoot me an email, drop them in the comments, etc., and I'll get them covered one way or another. And we'll see you all tomorrow. All right, have a good one. And for the rest of you, stay tuned, hang out for a second, and we'll transition over. Have a good one. We'll talk to y'all later. Thanks.